What's up, everyone? Hope everyone had a good week. For those of us that have reopened, hopefully you enjoyed the reopening, got out to do some things you haven't done in a while, but of course, we want to stay safe and smart for all those elderly and high-risk individuals and friends and family among us. So, quick look at the markets last week. Dow went from 24,331 to 23,685, a drop of 2.7%. Nasdaq down 1.2%, going from 91.21 to 90.14. S&P down 2.3%, going from 29.29 to 28.63. As you can see from the weekly as well as this monthly chart coming up, the S&P continues to stay in the trading range that we defined several weeks ago, with the peak being the 618 retracement level. It's also coincidentally very close to the 200-day moving average, and the troughs have been the 50% retracement level, which coincidentally is also the 200-week moving average. So, as we stated a while back, we expect the markets to be range-bound unless we get a positive headline at the top of the range or a negative headline at the bottom of the range. Now, there are a couple interesting news pieces this week. On Monday, Peter Navarro threatened China with sanctions, retaliation, punishment of some kind for what he calls their role in the coronavirus becoming a worldwide pandemic. I believe this is really more political and more ego-driven, especially by Navarro, because he's had a long history of publishing books that have bashed China for their economic policy, their trade policies and such. And also, obviously, our president wants to be reelected, and he believes his base wants the blame to go to China for this, and certainly not him and his response. Not going to get into the politics, but that's just kind of the summary of the situation there. On Friday, we had a very poor retail sales number. The April retail sales plunged 16.4% to the lowest number ever. However, if you look at the link to the CNBC article I'm getting these numbers from, you'll notice that non-store retail sales actually surged quite a bit, meaning that people still want to shop. They just can't really shop at stores, so they're buying from online retailers like Amazon, Best Buy, Walmart, Target. And some of the categories that are down drastically are clothing, electronics, furniture, things where you kind of want to go to the store, check them out, try them on before buying. So I expect these to actually bounce back quite a bit, especially once we reopen. It seems like many of the people who have applied for unemployment are finally getting their checks, and I expect these checks to be spent. It seems like the government's doing as much as they can to prevent people from falling into debt. So I think this boost in spending power for all people will really actually allow us to bounce back heavily once the department stores reopen. Of course, we know that JCPenney just declared for bankruptcy, and there's some other retailers that are in trouble. But people want to spend, and there's going to be deals out there. I know that locally, our Burlington Coat Factory opened this week with a 50% store-wide sale. And it just happened that we unloaded. We bought a ton of stuff. Some of the things we never really planned on buying, but due to the prices, we just had to buy. And I expect this to be the case with many of the items at Burlington, Ross Stores, TJ Maxx. So look for the discount retailers to have a lot of inventory coming up, especially with these bankruptcies. But I also expect a lot of the department stores to have good deals too. And you see a lot of traffic going there, as well as I believe consumer sentiment and retail sales will actually skyrocket once the majority of the states are open. Now, jumping back to this weekly chart, you'll notice that on Monday, after the Navarro threat came out, the markets dipped for a bit, but then we bounced back and ended up higher on the day. The same thing happened on Friday. We opened a little bit lower, but then we ended the day higher. Ultimately, when we see the markets go up on bad news, it's due to two reasons. One, we're just oversold, or two, people are anticipating positive news in the near future. And I've been on record saying that I think the market's a little bit toppy and overvalued lately, especially looking at my greed/exuberance indicator known as Tesla. But at this rate, I don't want to fight the market. I think it's safe to say that we're going to make it back up to that 2950 level, possibly 3,000, because that's a nice round number to get up to. And at that point, it's just really going to depend on if we can get a positive headline that day. If so, you're looking at jumping right back to our all-time highs, not because the economy is doing well. And we got to remember, the stock market is not a reflection of the economy. It's anticipating what the economy can and will be. And again, with the Fed buying all these bonds and mutual funds and pension funds having to blindly rebalance to keep their stock bond ratio. If the bond buying means that bond prices have gone up, meaning these funds then need to buy stock. And if the Fed keeps buying bonds, which they have officially started doing this past week, then these mutual funds will need to sell their bonds and buy stocks in order to rebalance and maintain their investment ratio levels. And this will drive the market up despite what is a terrible economic situation for many Americans and a clearly overvalued market in terms of PE ratio and sales. Jumping back to last week, again, I need to reemphasize the two major things that can bring this market down, which are one, the Fed beginning its tapering or slowing of its bond buying program, or two, if the administration decides to hit China with sanctions or something that will stop global trade and the global economy. So that being said, let's end with some fun news for the week. And like the past couple weeks, I haven't really been able to find anything funny and super just hilarious, but this is a bit of good news and very curious news, if you will. So Sylvia Goldshaw is a New Jersey woman who has lived through both the Spanish flu and coronavirus. She got both and has healed or recovered from both. She was born in 1911, got the Spanish flu shortly after, and this year she got COVID-19 and has recovered from it. What's impressive is that her neighbor, a 108-year-old New Mexico man, also beat the virus. And by the way, Sylvia is 108 years old as well. So I don't know what they're drinking the water over there, but they are doing something right. It's an incredible story. And we hope that many, many more of our elderly friends and family will be able to recover from this virus. And, you know, with these treatments coming out, remdesivir and whatever Regeneron is doing with their treatments, we really hope that COVID becomes even less of an issue than it is today. And not to belittle it, because what I believe is a 1% mortality rate is bad, but it's not as bad as the media is making out to be. I think it's finally becoming politically correct for us to begin reopening. And once it becomes that way, then maybe we'll finally get over this fear. Again, I want to jump back to the Kubler-Ross 5 stages of grief I've covered last week and a few months back, and we just want to keep an eye on that. I think we are really close to the acceptance stage, and once we get there, the fear will be gone, and it'll really be up to the economy and the consumer to tell us where the market will go. So thanks for tuning in, everyone. Hope you've been enjoying the short videos these past few weeks. Really not many headlines, and I think we're going to continue to stay range bound, stay safe, continue to enjoy the reopening if you're opening, and have a good week, everyone.